Welcome back. Now, the fourth edition of India's flagship energy conference, the India Energy Week, is underway in Goa. And from the sidelines, Manisha Gupta caught up with S&P Global Energy's president, Dave Ernsberger, on his outlook for energy prices in the backdrop of geopolitics and trade concerns. Listen in.
Joining us here at India Energy Week is Dave Ernsberger. He's president, S&P Global Energy. Dave, thank you so much for joining in. First of all, your sense on all the geopolitics, trade tariffs, and its impact on prices and demand that you would have seen.
Well, this week here in India is actually an exciting week in the global markets because it's the first week after Davos where a lot of the geopolitical narrative for 2026 was teed up and actually advanced a little bit. And what we know coming out of Davos and what we're talking about here in India Energy Week is how is this uncertainty around geopolitics playing out in the price of commodities, particularly oil and gas at the end of the day, and what does that mean for demand? And the verdict so far is that the oil and gas markets are not discombobulated, they're not broken, they're flexing to this new situation that we have. And it's been very exciting to see here in India the way that any source of incremental demand in the market is playing its part in moving that conversation forward. So. Okay. Volatile environment, but the markets are coping well, and India is a big part of that.
How would you also look at India energy security, because that seems to be the conversation around?
Well, the most interesting thing to me here this week is seeing the queue of sellers lining up at the door of India's buying community. And that's great news for Indian energy security. We heard from the Canadian energy minister this morning here in Goa. I've talked with some folks who were representing Venezuelan sales in India who are here also looking to do partnerships in India. So the opportunity to diversify suppliers to India has never been greater than it is this year.
How are you looking at the global markets? Do you think they will settle down anytime soon? And where would you look at the crude prices from here?
Well, certainly the energy markets are fairly settled.
Okay.
We see certain pockets of price movement. U.S. natural gas prices are getting a lot of attention this week. That's a very localized phenomenon. The price of gas in India is actually relatively competitive compared to what it has been over the past few years, and so is the price of crude oil. Generally speaking, in the global market, we're expecting to see oil prices averaging at about $59 to $60 a barrel over the course of this year as a whole. I know they're higher than that now, but for the year as a whole, we see them settling back a little bit. And in the next 2 or 3 years, we see prices averaging around $62 a barrel. So, markets are moving a little bit in the here and now, but they're actually very settled and tilting towards being a little bit oversupplied for the next couple of years, which, again, if you're a buyer, is great news.
All right, from crude, let's shift focus to the bond market.